Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Today we're talking about the Trump effect on the economy and commercial real estate. Please welcome my next guest. Is Dr. Larry Souza. He's Senior Investment Economist and Advisor with Pillar 6 Advisor. He also sells investment-grade, institutional-grade commercial real estate properties, and he also teaches at 4 universities. Larry, thanks for joining us today.
Yeah, you're welcome.
And so, Larry, what do you think of our new president for people who are in the commercial real estate related businesses?
Well, I think most of the economists that I've talked to, along with myself, would come to the conclusion that this will be a major shift in policy that we haven't seen for quite some time. The markets, if you look at the stock market, in the bond market already, the bond market has sold off and probably lost about $1 trillion to $2 trillion in market cap since the president won the election in anticipation of higher inflation expectations and interest rates, which have already started to flow over into the commercial mortgage and the residential mortgage markets. And the Fed, Yellen's actually speaking today here in San Francisco, and based on her comments, along with the other open market committee members, they are guiding the market and having at least 2 or 3 interest rate hikes into next year.
Right.
Basically, the bond bull market is over. Interest rates, especially on the 10-year, is up about 100 basis points since Brexit. And those interest rates will probably reach, on the mortgage side, particularly residential, we'll see mortgage interest rates up to 5% probably by the end of next year or early 2018.
Okay.
He's proposing around $1 trillion in infrastructure spending. He is proposing tax cuts of almost an equal amount. The infrastructure spending has a multiplier effect, which is fairly immediate within the first 12 to 24 months of implementation, and then it degrades and then impacts the economy again once those projects are online around 6 years into the future. We're already at $20 billion in debt outstanding. We were already forecasting another $10 trillion over the next 10 years just from entitlements. And with the tax cuts and with the infrastructure spending, along with other aspects of what the Republicans want to do after winning both House and Senate and the executive branch, we're probably going to see another levering up of the economy. And I think at some point in time, the amount of debt that will be coming in to the capital markets, along with a sell-off of U.S. Treasury securities, along with issuance of new sovereign bonds over the next 3 to 5 years, will push interest rates up and probably send us into a recession by the end of 2018, but definitely a fairly severe recession between 2021 and 23.
Okay, so recession between 18 and 23, and you think that?
Yeah, I'm saying a recession at the end of 2018. I'm sticking to my guns. It should be a somewhat mild recession, but a corrective recession. But I'm forecasting a severe, almost financial crisis type of recession in 2021 through 23, because most of the major industrialized and emerging economies have levered up their systems to the point where their debt to GDP is 100 to 200, and in some cases 300%. And at some point, they're just not going to have enough tax revenues to pay the interest on the bonds, and the bondholders will have to take a haircut or they will default.
And Larry, do you think a Trump presidency makes this potential recession coming up more probable or worse, or does he help? Or is the infrastructure, the reduced taxes, increasing our debt so much that it makes it worse?
I'm concerned about the debt. I mean, our debt's basically doubled in the last 8 years under the Obama administration just because of the severity of the financial crisis. We're already seeing, entitlements increase significantly as the baby boomers age, and they start drawing on, Medicaid and Social Security, and the Fed, the Treasury will have to start liquidating securities to pay out, to those entitlement holders. That coupled with, additional debt that will need to be issued to pay for infrastructure, and the interest on the debt going forward will set us up for a recession in 21 through 23. And I know if the debt levels get really high, they're going to go after real estate and the 1031 exchange. They're going to go after the mortgage interest deduction, and they're going to go after higher corporate income taxes at some point in the future to bring down the debt levels.
Okay. And what do you think about Trump's ideas about trade and immigration and the impact there?
Well, we are highly impacted here in the Bay Area, and especially the Central Valley. The Central Valley relies on immigration, particularly foreign immigration, in regards to the farm industry, and they're already facing labor shortages there, which just drives up the cost of food. And then the Bay Area, which relies heavily on foreign immigration, HB1 for high-tech workers, will be impacted also because there's already a labor shortage in highly skilled, highly educated workers here. So I think the coasts will probably be impacted the most in the Central Valley and Texas through immigration policy. And then the places like Cambridge, Massachusetts, and Midtown, and other mini Silicon prairies and valleys will be impacted also because we rely so much on foreign immigration and highly skilled labor for our tech industry.
Okay. So the worst part of it, you think, is the debt, the national debt. What is the best thing, if there is a best thing, that you think from the Trump presidency?
Well, if it can be done right and not throw out the baby with the bathwater, I think a modification of Dodd-Frank is prudent, particularly it impacts regional banks and local banks the most. The money center banks were the ones who got us into the problem by manufacturing derivatives, off-balance sheet contingent liabilities. If he also is prudent, in providing incentives through HUD, although I don't think Ben Carson is really the guy to lead it, that would increase home ownership if it's done correctly through policy. If the Obamacare is modified, that would be, helpful in providing medical services to the other 20 million people that don't have it. But if they repeal it, healthcare makes up 27% of the total GDP. So if they repeal it and all of a sudden all that money goes away, it's going to have a major multiplier effect and could send the economy into a recession. So you have Dodd-Frank, you have housing, you have financial regulation, you've got FDA and prescription drug approvals. He's going to be going after everything. And the question is, will the policy be better than the policies that were there before, or will it generate unintended consequences that will negatively affect certain industries and certain geographies across the United States, which it probably will.
We're talking with Dr. Larry Souza about the Trump presidency and the impact on the economy and commercial real estate. And you mentioned the 1031 exchange. They might go after that. That seemingly would really hurt the economies, and there's a lot of business generated around the 1031 exchange. And you think they may go after that because they're just going to need the money to feed the deficit, or they may go after it for another reason?
Yeah, because there's some hawks in the Republican Party that want to mitigate, the level of debt. At some point in time, you can't continue to issue bonds and then inflate away the debt. At some point, you're going to have to raise taxes. And the perfect place to go for the taxes is the mortgage interest deduction. Phase that out, means tested by income, and then go after the 1031 exchange, and maybe go back after recapture tax and transfer tax, income tax, and capital gains tax. I think everything at some point, the debt will get so high, and then they'll have to raise taxes to pay down the debt.
Yeah, so you think everything may be on the table. I'd hate to see the 1031 exchange go away or be altered to the impact there. So what about deregulation? I mean, there is talks of deregulating a lot of things. Is that hurt, help? What do you think there?
Regulation, is designed to cure market failures. And the financial crisis was huge, but Wall Street has been lobbying systematically over the years to dismantle Dodd-Frank and to go back into the derivative manufacturing business. But in my view, that's extremely dangerous. Healthcare, there's 40 million, 50 million people, that need healthcare. 22 million currently have it under the Obamacare. 20 million people need healthcare. If they roll back healthcare, then that means that actually the constituency that voted Trump into office will probably, a significant portion of them, will probably lose their health care. And that could come back to bite him in his second 4 years.
Closing tip for our listeners and viewers, Larry.
Watch the yield curve. The yield curve is basically interest rates by maturity for U.S. Treasuries. It's starting to flatten. When it inverts, when short-term interest rates get close to long-term interest rates or actually get higher than long-term interest rates, the stock market will peak a year later, and we will be in a recession in 24 months. Watch the yield curve. Watch what Janet Yellen does. Watch what the Fed does.
We'll be watching it, Larry. Thanks for joining us on the Commercial Real Estate Show.
You're welcome. Anytime.
And thank you for watching or listening on the radio stations or iTunes or YouTube or wherever you're checking out the show. Maybe you're on commercialrealestateshow.com. We appreciate you being with us. Be sure to connect with us on all our social media accounts and on YouTube. Comment on the show. And join us next week. We'll have another great show for you. Until next week, be sure that you always lead, learn, and laugh. And join us for the Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.